Oh my goodness, look at this. Bitcoin just blew through 23,000. We knew that it was going to break 20, but did not know it was going to break it before the end of the year. Expecting around 100,000 next year, but I don't make price predictions for this reason. So I'd like to take this opportunity to cover with you guys the crypto thesis from Messari. They do great research and have some predictions and trends for 21. So Selkis, if you're not following him on Twitter, go over and check him out, is mega bullish of what lies ahead in 2021. The next bull cycle will be the, quote, big one. And I'll be looking for $100,000 by the end of 2021, which is crazy. Crypto market cap of $3 trillion. He's got some interesting takes on Ethereum and some other things outside of Bitcoin, which we'll go over here. And then he breaks it down into these 10 narratives that are driving that rally to $100,000. Number one, these blue chips of real versus relative. In 2017, we saw huge ICO craze and how it really infuriated a lot of people, specifically the Bitcoin maximalists, because they saw that crypto could only be sound, hard money, and it ended up being much bigger than that. And some of them ended up missing that boat. So please don't miss that boat. He thinks about crypto in these three categories: monies, which obviously is Bitcoin; smart contract platform, which obviously is ETH; crypto dollars, stable coins are becoming huge, probably a little bit too big in my opinion in some ways; DeFi, which is decentralized finance; pegged and synthetic assets, which we really haven't seen a good amount of yet, but will be huge in the future, I and he believe; and then Web3 and NFT assets. I've been playing a lot with NFTs recently, and they're just utterly fascinating, and the potential there is ginormous. So Bitcoin, you guys know my backstory here on what I believe is driving. One of the things that are driving that is just the Fed and their monetary policy. Printer go burr, number go up. Central banks have added trillions of dollars to their balance sheets and monetized sovereign debt, and we're looking at just unprecedented levels of debt. So look at the central bank balance sheet here. We're looking at 7.2 trillion. That's ridiculous. Negative yielding debt are at an all-time high. Numbers differ, but looking at a third of the world's debt being in negative return, that is by definition unsustainable. MMT is something that we're just now getting into and seeing the challenges, and it's just mind-blowing to watch. Like, if you look at the M1 money supply, like we're doing pretty good. The housing issue, we're at a 45-degree angle here, and then just we forgot about all of what makes money at that point. It's ridiculous to watch this. And we've seen a lot of people waking up to this. It seems every single week we're having large pipe hitters come on board, with Paul Tudor Jones, Stanley Druckenmiller, I can never pronounce his name, Chamath, Bill Miller, JP Morgan is coming around, Raoul Pal. This is mind-blowing to watch. And for those of us that have been in this for a little while, we've seen this coming. We've seen this narrative for so long, and we felt like we're taking crazy pills, but we're just now being validated in this. Number three, Ethereum, the everything marketplace. I don't know if you've ever read the book on Jeff Bezos, the Everything Store, but that's kind of what we're getting at here with Ethereum. Is it's just hard to believe how much building has happened on top of that base layer of Ethereum, and it's in a lot of metrics eclipsed Bitcoin in dollar value and building, etc. Bitcoin may be primed for a big year due to its macro positioning, but it's Ethereum that has taken flight as crypto's most important platform, one that could power the entirely new financial system and more, a resilient internet. It's crazy to think how much ETH is capable of. You have so many things. Gas fees are pretty high right now, 120 Gwei, that's pretty large. From Uniswap to Tether to some actually the scams are gone down, which is great to see. There's so many things that are built and building on top of Ethereum that you can't write off Ethereum, especially with its transition to proof of stake. 4, DeFi, so decentralized finance, and this is what Bitcoin advocates in the early days were saying, that they were trying to bank the unbanked or unbank the banked. And decentralized finance does this without that middleman. It takes a hell of a lot of work from the FDIC insured financial system to do anything in the regulations and all of these things that are hindering and preventing the average person from reliable access worldwide to their own money, which is just mind-boggling. Decentralized finance could fix this. Maker, Uniswap, Compound, Balancer, there is no middleman in these. These are contracts released into the world, and then people are integrating with these contracts, doing lending by themselves. DeFi is just justifiably hyped, is what he says. It is on a really crazy path upwards. So you have all of these assets that are trading pairs, not even talking about lending, but just if you want to get some sort of return on money, you're looking at 18, 20%, 46, I wouldn't trust that. But if you go put your money into a savings account, you're going to get maybe 0.1% if you're lucky. But you're looking at 18, 20% reliably here, and the risk is not that high. The risk is not 20% high. So there's some arbitrage that will happen in the future, and more people will get into these decentralized finance systems. But it's a huge barrier to entry from a learning perspective, from a technological perspective, from a risk perspective. Number 5, stablecoins are eating the world. So $20 billion of Tether, and about $200 billion of actual currency flows is just crazy, especially for Tether, which has not been audited to prove more than 70% of the assets are actually in existence, and they're under investigation. It just shows the power of how a network and a first early adopter can just power this market. Look at the growth of Tether here. They just printing it with the flows of that money coming in. That's enabled so much transactions of crypto. That may be the biggest black swan event. If something does happen, the downfall of Tether could have significant ripple effects throughout crypto. Number 6, crypto credit, locking in value. So if you want to think about lending here, most popular name potentially is BlockFi. So I can either have them custody or take money based on my money, the same way you would do to a collateralized loan. This is going to be centralized instead of a decentralized solution, where you're able to get a pretty decent APY on this investment. So for instance, if I don't want to pay taxes temporarily on my crypto, I could park my crypto in BlockFi and then borrow other crypto, or I could get paid on my crypto that's in there at 8-9% upwards. Again, comparing to a normal loan, which you're getting 0.1% or something, don't really compare. And then you don't actually have to pay those capital gains on that crypto temporarily. You can let that crypto grow. Number 7, synthetics. Synthetics, you can think of a representation of something on the blockchain. So the Grayscale Trust, for instance, representing Bitcoin and Ether, that you could buy on a stock market, GBDC as an example. But eventually, every single financial asset that you can think of will be tied to crypto. Don't necessarily agree with 100%. Some don't make as much sense as others. It may seem like tokenizing gold on the blockchain is a good idea, and it may be eventually, but the fact is you're still going to need somebody that has the custody of that in a very expensive warehouse with armed guards. That isn't what crypto could bring to this. That's not what crypto can benefit this community for. Infrastructure. the unbundling of the exchanges is important. People are moving their crypto off of those exchanges and the liquidity is going with it. So as you can see in this graph, the reserves on the exchanges drastically decreasing as the price of the crypto is increasing. And we know that scarcity can cause these faster squeezes. And by people, individuals, organizations moving the currency off of the exchanges, that enables that moonshot that we're experiencing right now at 23,490, just crazy shooting up there. Web3 and NFTs. NFTs are nifty. NFTs are so cool. Web3 being the future of the internet. If you want to think about the interplanetary file system, and then the NFTs being non-fungible tokens. One token is not the same as another token, and there's some power there. There's also some power in decentralized web hosting, in decentralized file storing. This Web3 has great potential to completely disrupt the current way that we're doing things. Hopefully in a decentralized manner, hopefully not aggregating and centralizing power just like we've seen historically in the internet develop. And then the NFTs, let's touch on this because I think they're just so fascinating. You have the ability to tokenize individual things that are maybe collectibles or art, social tokens. Think about if you had a concert that you wanted to go to and they only released 100 of these tokens to that concert. It would be very cool to transact. There could be some very intricate and interesting things in addition to that. A key to a song where those 100 individuals are the only ones that can listen to that song. It can't even be copied and sent to your friend. That's enabled with the blockchain governance. So now we're able to actually decentralize governance that happens on the blockchain, and it is more difficult to corrupt or to overpower. Obviously, some whales and some other things have challenges there. And then derivatives. Anything that you can program into the blockchain, you can do. NFTs are no exception there. It'll be interesting to see how that one develops. It's a little bit harder to quantify the value of some NFTs like art, but people are trying to do it. And then the final boss. How do we exit the current system restraints and constraints that we have with ourselves? So as crypto now is at a $500 billion industry, that market capitalization is getting on the radar of some very important people, and we have senators that are holding crypto. So the regulation and our ability to form bodies and organizations with this blockchain is great potential. So the future is extremely bright here, is crypto bright. And we're seeing that here. The predictability of these time cycles is just astounding. How it's predictably regular. Every 4 years it's hitting these cycles. The next one should be towards the end of 2021. But because of how people are onto this new cycle and these reliabilities of that, we could potentially see that happen earlier. We'll see. Time will tell. All I know is that this is exciting. Along for the ride. Hope you guys are too. This is Jerry. See ya.